Start investing in gold and silver at sdbullion.com today and join over 35,000 precious metals investors who have made the switch to the lowest gold and silver prices in the industry. SD Bullion recently claimed a spot on the prestigious Inc. 500, making them one of the fastest growing bullion companies in the United States. With low bullion prices and over-the-top customer service, SD Bullion is setting the standard for precious metals transactions. Visit www.sdbullion.com today. Start saving on every precious metals purchase you make.
This is the Doc and Eric Dubin with the SD Weekly Metals and Market Track. Well, joining us today is the silver guru himself, David Morgan. David, it's great to have you back on the show with us.
Well, thanks for having me back.
All right. Well, it's been another big week for the metals. Gold traded as high as $12.45, I think, both the last 2 days, Wednesday and Thursday. It's currently trading about $12.35 here in the afternoon. Last couple of hours of trading in the access market here on Friday. Silver's been the one that's had the big move today, up almost 50 cents in the day, and it's traded above $18. And as we talk here just after 3 p.m. Eastern, it's hovering right around that $18 level. Certainly great to see silver leading gold today, and actually gold pretty much trading flat on the day, with silver having a big day. So let's start with your take on the markets here and the strength in silver we're seeing today, David.
Okay, well, it's kind of a repeat of last year, really. I mean, if you go back to 2016, January, February, I said that the market had bottomed at the end of 2015, and then I expected a really strong January minimum, probably January, February, and then I'm pretty good at letting the market tell me what it's doing and not me telling it what I want it to do. And we got a really nice rally all the way up into the summer months, which is unusual. Usually August is the worst month for gold and silver. And we got out on our trading positions at that time. And then we watched, a lot of the, uptrend come back down. But if you look at it on a year-over-year basis, all of 2016, and you look at Investors Business Daily, the gold mining sector is one of the top ones for the year, even the round trip. So as far as this year is concerned, it looks like it's kind of a repeat performance. I'll be doing a pretty detailed commitment of traders for the members here later in the day. But I'm not like cheerleading this rally as far as I'm very happy to see it. I'm not cheerleading from the aspect that I really like the commitment of traders reports that I'm looking at on the silver side. Gold looks a little better, but it's still becoming more of a difficulty for me and others, I believe, to interpret the COT properly, which means it changed about a year ago because the SGE, the Shanghai Gold Exchange, had gotten prominent enough and enough volume to create a substantial enough market to influence what the commitment of traders reports looks like. And really, you can almost look at the SGE and kind of superimpose that data on top of the COT reports. And what that meant, and I said this to my members, throughout the months, is one, it's harder to interpret, and two, that there's a lot stronger hands on the long side than there used to be. And that's, again, going back only a year and a half or so. So I'm still kind of getting in the flow, if you want to call it that, as far as what the predictable end is when we've had what I call a washout and the game starts over, which is all about the paper markets. It's all about how they move the price around. And it's all about when they've flushed out as many longs on the trading funds as possible to start, as I say, the game over. So looking at silver, I'm more inclined to see that this thing has got some more upward potential, but not a lot. On the gold side, it looks a little better. But Eric, I know you look at this stuff as well. You might disagree with my take on it so far. Why don't you add your thoughts on this, what you're seeing?
Sure, yeah. I mean, we talked a moment ago before we started the call about how the parallels to last year are so fascinating, bottoming out in December. And last year, we or the year before, I should say, 2015, last week of December is when we bottomed out, if memory serves. I don't have a chart in front of me, but basically, other than that little tweak of difference, we bottomed somewhere around the 22nd of last year, and we're following a very similar pattern where, if memory serves, you were on our show back in either late January or early February. I'm not entirely sure, but we were talking about how silver would leap higher and exhibit its kind of restless metal tradition of showing where the tip of the spear of sentiment was. And it's doing that right now. I mean, even as we record today on Friday, the really big move that we see is suggestive of a tighter market than what most people would give credence to. And this kind of snapback style leap forward that we have been seeing periodically since the start of this year. Every once in a while, silver will be doing this kind of thing. And the same thing was happening when we were talking last year, and looking forward, exactly as you just noted, where the market was just clearly showing that a lot of people were trying to get back into precious metals after the long consolidation and bear market phase that we were laboring through. And there's so many parallels to what we saw last year unfolding right now. I definitely want to circle back to China in a moment, but it seems like ever since the options expiration with gold last month, on January 28th, the tenor of the market has slightly changed a bit, and I'm not exactly sure what's motivating traders to be all the more aggressive. And we even see, little anecdotes of this kind of thing with people like Stanley Druckenmiller coming back in and, kind of, reversing his somewhat flawed stance that he took in his justification for leaving the gold market on the day after Trump won, or the day of Trump's victory. I mean, he was advancing the whole thesis about interest rates being at all times bad for gold, and that was his justification in part for why he did what he did. The market looks a lot stronger, and a big part of it is definitely Chinese demand. And I'm curious if you could flesh out more about what you think of how the Shanghai exchange has had an impact on silver. A lot of people focus on gold, but we've seen some gigantic premiums over global spot being signaled out of Shanghai off and on over the last couple of months. And getting a handle on what is going on with silver demand when it comes to what flows into, India is really kind of opaque, but China too is sometimes hard to read. And I was wondering what you think has been going on when it comes to building on what you were saying about the way COT has changed and the market has begun to shift more towards the east. We're even seeing that in silver. And the best way we can point to that is that really large premium that we've seen periodically. So, how much of an impact do you think the more physical settlement-oriented Shanghai exchange is finally happening? I mean, we've been expecting and hoping to see this kind of dynamic unfold for years now, even before the market was under development and prime time. People were speculating about the impact that China would have on the physical market, which would diminish the power of the paper trading mechanics that go on with COMEX and even in the London market. I mean, where do you think China's role has been when it comes to silver, say, in the last 6 months, particularly with all of the capital flight problems that they're battling in their devaluation of their currency that gets ahead of the Chinese authorities? It's happening faster than they want it to happen.
Well, I think it's significant. I think that, number one, I'll just give credit where credit is due. I think the best analysis that we've done is reaching out, and Kuz Jansen did a great job for us on our Mastermind series. And we went through the silver offtake from the SGE, and he's probably, in my studied opinion, got the best take on it. There's a lot, actually, that comes off the physical that is a bit opaque. I'll put it that way. The Chinese, from my personal experience when I was in Beijing and met with some of the top authorities from the Mining Bureau and some of the bankers at CITIC, was they were very interested in silver, more from a technological aspect. When I brought up the investment side, they weren't laughing at me. And then, of course, I brought out a Wanbo that I had picked up from eBay and talked about, their monetary history and the last to be on the silver standard internationally and all that. And they kind of quieted down. And not that I'm trying to, I'm not confrontational. You guys know me. But nonetheless, I stand my ground as well. I think that the Chinese, and whatever you speak in generalities, it's going to be exceptions, are more interested in what the next 5 to 10 years for silver demand will be on a technological side than on a monetary side. The idea that the Chinese are out there rah, system, buy gold, buy silver isn't really true. They are much more inclined to be neutral to pro gold buying, but they aren't really that out that much cheerleading their citizenry to get into silver on an investment basis. And the reason I know that is my Chinese contacts. And I have one that writes the Morgan Report in Mandarin every month. And he's been with me for years. And I have him do an update for us from time to time. And I mean, he's done he has a coin shop there. I mean, come on, you're going to get, it's like you guys, hey, I'm going to say, hey, John, what's going on? Well, John knows what's going on through SD Bullion, but he also knows all the other guys that have, businesses similar to him. And so it's the same situation here. So hopefully I answered that. I'm not trying to evade the question. The idea is, yes, the silver offtake is probably greater than most think it is. Is China's government saying, hey, citizenry buy silver? No, actually they're not. But is the Chinese government concerned about the silver market? And I would say it like this. They're very concerned about gold for monetary purposes. Obviously, they are importing gold hand over fist and have for a long time. And what they report is what they're asked to report. This is something that I'll do on your show, and I don't know if I've done it maybe once or twice. I say, well, China only reports this much gold. Well, the reason they report that much gold is because we didn't ask the right question. It's like me asking, Eric, how much silver do you have in your basement at home in the left-hand, in the southwest quadrant? And you answer, I've got 1,000 ounces. I didn't ask the right question. In all the banks and all the facilities that you have internationally, how much silver do you have? That's a different answer. So people say, well, China says they only have this much. Yeah, because they asked the wrong question. But anyway, I drifted off and digressed. I come back. So the monetary side, gold, from the government perspective. From the government perspective, silver, QT, keep it quiet. There's going to be, and this is opinion, this is not studied fact, that they're seeing stuff in the silver market in the future that they will want. And the biggest question I got when I met with the Mining Bureau guys, in fact, it was both. It was the Mining Bureau guys and a couple bankers. But regardless of that, was they don't waste anything in China. And their main concern was if there were any breakthrough technologies or technologies coming to the fore that would help them recycle everything, recycle all the silver possible. That was one of their biggest questions for me. So, hopefully I answered that, but it's a different kettle of fish. And, which one do they favor more? It'd be hard to say. We all want monetary stability. But on the other hand, what's going to be the driver in the silver market? Well, it's going to be two. It's going to be industrial demand, which is already half of the market. And then once that gets very, very iffy, we'll call it, you already see Samsung. I mean, Samsung eats a ton of silver every year. I mean, they take on a mine like Avino, which is, a great mine. It's on my list. I own it, so full disclosure there. But, why do they make a contract with Avino to get all of their silver production? Because, fill in the blank, because they don't want to be caught short on the silver market in the physical supply chain. That's why.
Just a quick question for you, because I was totally fascinated what you were saying about in Chinese interest in amplifying their efforts to do greater efforts for recycling, which totally fits in with their mode of thinking. Were those contacts of yours government or private sector?
Both. Government the first few days, and then private sector for about 3, and then we had a big meeting before I left, and this is where it got, I would say, uncomfortable, because I was sort of like brought over as sort of like the silver expert type of guy, and I wasn't told to sit in the corner and keep my mouth shut. But the main thrust of the meeting was going downhill in a hurry. And it was one of those moments that we all have from time to time in our lives where it's like, well, do I speak up or shut up? And what's the consequences? And I thought it through, and I just started, doing my thing, talking about silver fundamentals, and it kind of like put some more energy in the room, you might say. And that's when a lot of questions came out on superconductivity. Which one did I favor? Silver recycling, silver as money, silver in the monetary system. I mean, a lot of things came out on the table. And, I'm not trying to pat myself on the back, because it was a rather tense moment for me personally, because, I knew I was pretty much there to be called upon if any, silver issues came up, and not just start like, talking, not randomly, but it actually worked best for all parties involved as far as I'm concerned. And I got that because of, contracts that were signed, the handshakes that went on, and that type of thing.
Mm-hmm. And before we leave China, I'm just curious,
I hope I didn't come across like too egotistical on that. I'm just giving you the fact that
you're never that way, David.
Thank you.
I'm curious if you have any discussions about an insight that you might have that you could share with our audience as far as what was going on when we saw those really large premiums over spot in the Shanghai market for silver vis-a-vis world spot.
Well, I think it's people that know. I think, I had a very well-off fund manager, and he and I had a very long discussion years ago. And he said, if you really wanted to have control, of the monetary system, you'd corner the silver market, not the gold market. And then he went on to explain about, the Chinese long history about silver. And did I know? And of course, certainly not a know-it-all, but where the trail he was going down was, I know most of that. You're right. And so he wanted to do a white paper presented through his firm, and he wanted me to hand carry it and have a discussion about it. And that never, ever, ever materialized. So you could call it fantasy at this point. But the reason I said it and voiced it on your show, Eric and John, is that there's a lot more to the silver market than a lot of people suspect, because of its unique properties as an industrial/technology metal, and also that thing you cannot overcome, which means that the word silver and the word money is the same in all the Romance languages. You can't say it's not money. It's the same exact word in the Romance languages.
Let's transition here a little bit and give listeners a little bit of an update on what we're seeing here in the U.S. markets on the physical side. We can start with Silver Eagle sales. January sales came in really strong at a little over 5.1 million coins. But it's interesting because February tells another story. We're recording here on the 10th. It's about 8 business days worth of sales, nearly 2 weeks here in February. The Mint has only sold 250,000 coins month to date, which really indicates, to me anyways, that the 5.1 million January number was largely due to inventory building by the wholesalers and the APs. So while demand remains pretty strong in historical comparisons, the start of the year, demand-wise, in silver has been fairly subdued compared to what the market saw in 2015 and really the first 5 to 6 months of 2016. It's beginning to wake up a little bit here with the sustained move. Gold and silver have been going up about 8 weeks now. So it's been picking up a little bit, but still there's plenty of inventory on the market to meet demand. And premiums on 90% silver really are substantiating that. There's really plentiful supply of 80-90% product. Even halves are pretty plentifully available. And premiums on all the 90% coins continue to creep down. And really, it's just another indication that the market currently has plenty of physical silver inventory to meet demand. And David, we've been kind of talking on the show really for probably about 5 to 10 weeks that just my personal take, but I think the market overall, the retail demand has calmed down a bit here, really ever since the Trump election, that everybody who buys silver as an investment because of concerns that the financial system is going to collapse is kind of on a Trumphoria right now, that everything's going to be great again. And we all have our reservations whether that's actually going to be the case or not. And certainly a lot of his policies are likely going to be inflationary. So it likely wouldn't take too much for that sentiment to shift and reverse. But just my own personal opinion, kind of what we're seeing in the market right now.
I'd like to add on to that. I mean, I keep in touch with a lot of the larger retailers and some of the wholesalers as well, and everybody's been telling me that it's very flat right now. The bag market, as small as it's become, is still a good leading indicator. So based on, what I said about the COTs with Eric, I think we may be seeing a temporary, thrust up kind of a thing. Will it continue or not? The market, again, knows more than I, but if I were going to guess, I think we're going to get some kind of a pullback. I don't think it's going to be a little one like it was last year, but, again, we'll have to wait and see. What I do know is that the January inventory, and you guys know this too, I mean, it's some of these dealers that buy first of the year, they get them graded, they get an MS 69 or 70 Eagle, and then they mark them up to an astronomical level, and they stick them out in the newspaper where people that don't know a darn thing about the silver market end up paying, $80 for a coin that's worth, 25. But anyway, I just, your listeners all know that, but that's why you always see these huge, inventory builds in January, because it's those people in the market as well as others that need to build that year of issue for various purposes, I'll put it. But it's flat right now, and I do think that we're a little careful, but let's just take a longer-term view. If you can buy physical silver under 20 U.S., come on. Come on, man. That's it. Do it. Do you have to buy everything? And you want to overextend yourself, borrow against your house? No. But as far as if you got in higher than that, substantially higher, and you have some available funds now, I mean, getting silver under 20, I think long term, it's a gift.
Yeah. I think to some extent what we've been seeing is what John just alluded to, and that's the Trump euphoria. A lot of we have different segments of the market buyers. The character of the stacker community and who buys most of these silver eagles, even maples in the Canadian market to some extent too, are different type of investors / hedgers than the paper jocks that'll dive into COMEX and try to position based on their forward look of geopolitics and global macro dynamics and broader brushstroke fashion, and then how they look at what is going on the international stage. For example, I mean, the silver stackers are predominantly, part of the reason why is they're also, people are a lot poorer than what they used to be, and a lot of people have been burned by chasing after silver, and there's some exhaustion amongst the stacker community because the number of people in the North American market among the stackers really hasn't grown in terms of just number of investors per se. And so, that is a factor. And then the Trump euphoria that Doc spoke about, I think, is a factor too. But when we look at the bigger picture dynamics of what may happen with Europe, with the French election coming and Le Pen's prospects of either winning or just certainly throwing a spanner in the mix, where France is going to be far more anti-Euro, and the nationalist movements rising in various places throughout the European Union, and Brexit being more material. I think you add that with the whole prospects of trade war even, and currency manipulator declarations coming on the head of China, and Trump stirring things up from a geopolitical point of view. Even though the North American stacker community has been far more quiet recently than what we would expect to see, when simultaneous to that somewhat weak physical demand in North America, we're seeing bullion around the world being snapped up in December. What was it, 156 metric tons coming out of Switzerland and landing into China, while GFMS were, kind of twiddling their thumbs and giving us a view that China's demand was declining. And there's a lot stronger dynamics worldwide than people are giving credence to. So I look at all of that and I see them.
Sorry to interrupt, but that just tickled me no end.
I mean, you talk about the bozos over there. Just when we had Dave Kranzel on a couple weeks back, and I was making the same point, he just started laughing out loud. It's just what a comedy show those guys are, right? I mean, supposedly the experts in the trade, and
I try to keep,
I know. I'll be the bad guy here and the bad cop. I mean, that was ridiculous.
Yeah, absolutely. I'll go down that road. I mean, I met Philip Clapwick years ago, and I don't know if Philip Clapwick is still with them or not, but he was, and he has been for years. And he got up there at the Silver Institute lecture, and he talked about silver in, this is very early on, like 2003 or 4 or something. And, $5 silver in 1980 is the same as $5 silver in 2000. And I read him the riot act. I really, really, really did. And I just can't let him get away with that nonsense. Just because they come from the London School of Economics, it's like, well, what does that prove? That you don't know anything. I mean, I was angry. So I voiced it. And I also think I wrote a public domain article on it. And I know I put it in my newsletter. But the point is that it wasn't a year or two. It didn't take more than 2 years where they started deflation adjusting the price, which is only right. I mean, but,
right.
And so, again, I just got to come back to you, Eric. I got such a laugh out of that. It's sort of like the Wizard of Oz movie. Nothing to see here. Let me close the curtain. You didn't see the little man pulling the levers. China doesn't want any gold. What's all that gold going to? China? Sorry, I just couldn't help myself because I don't get those kind of laughs in this market that often. But that one really, really made my day, week, and month.
Is about as good as when China made their declaration of 604 metric or whatever it was, memory fails, where they declared their gold holdings and did nothing for years. And then 2011, they come out and say, we got 154 metric tons, their official number. And the industry wonks are like, oh, whoops, well, yeah, okay, now we have to just change our plug factor.
Exactly. That's right.
Yeah. Well, a lot of people are coming to the market and are new to silver, to gold, to precious metals in general, and investing in general. And you've been in the markets for decades, and a lot of times you've been very insightful in giving people perspective on what was formative to you in terms of like books you've read and things that helped you learn to understand finance and whatnot. And I figured I'd ask you, for the new people in our audience, what were some of your best insights from people that you've learned from, whether it's individuals or books that you've read, or how would you say to people who are just coming to understand finance and are curious about it, what would you recommend them to check out above and beyond your website and the books that you've written, and what have been helpful to a lot of people learning, including myself? I mean, I started following your work 17 years ago. You were one of the very first people that I latched on to, recognizing that you had a lot of experience in this market. And when I started recognizing the new bull market coming, I was fortunate enough to bump into people like you. You're getting started on the internet around that time, and very insightful to learn at your feet, as it were, to study the knowledge that you've gained by watching these markets for decades. What would you say to people who are new and checking out silver and investing more broadly?
Well, first thing I'd say, I will start with me, and that is it's on the internet for free. It's been that way for years. In fact, I used to do it on my autoresponder. But if you just type in 10 Rules of Silver Investing, David Morgan, into Google or Bing or any good search engine, 10 Rules of Silver Investing with my name, you will get it. It'll pop up right at the top. And you can read those 10 rules. And they speak for themselves. So that's kind of a distillation of the silver and gold market. But really, you could apply the principles to almost any market. As far as what has influenced me the most, as far as my thinking, I think it was learning how the banking system works at a very early age and understanding that they really do create something out of nothing. And then that sparked an interest into monetary history and, well, what does that mean? And when I learned, it meant something rather dire, which is that all fiat currency systems have failed to this point in time. That's when I got on the internet very early on and did a lot of public domain articles in the day. Now I just usually do interviews like this for the public. Of course, I still write for the members, but I would make it a point that this is the first time that we have unsound currency that's the reserve currency of the world. So basically, as the U.S. dollar goes, so goes everyone else. And in the time frame of 99 or so, 1999 to present day, a lot has changed, and the BRICS have come up, and that may be a way to try and escape the demise of the dollar. But I don't think the Asia Infrastructure Investment Bank is strong enough to really circumvent a worldwide financial panic out of the U.S. dollar. But things are changing with Trump. I mean, if you look at some of the news headlines today, both the Aussie and Canadian dollars have turned up. Canadian stocks at a new record on a commodities rally. Copper and steel stocks have resumed their uptrends. The emerging markets, iShares, are on a breakout right now. And the commodity sector may be next. So, what I might have to take back what I said earlier on your show, that, silver and gold, ready to come back down. The answer is no, maybe not. I mean, this thing may keep going, and that's why I always let the market kind of tell me. I mean, basically,
I'm taking the other side of that trade.
Well, I'm moving my stops up. If the market's going from 1950 to 1950, I want to capture as much of that as I can on the trading account. And of course, my long-term positions. People have asked me, have you ever sold? And the answer, yeah, every now and then I'll sell a Krug or I have a little bit of platinum, and I've sold a platinum coin lately. Why? I need, $1,200 and I want to go buy something, for my girlfriend and I'm on vacation.
Some tools.
But as far as, substantially moving my net life savings, more or less, no, that's intact. And, was my average price, 5? No, because as I did better and traded in and out of the stock market, et cetera, I added to my physical holdings, so my average price, I don't know it exactly, but it's probably it's in double digits. It's above 10, and it's probably in the probably pretty close to the 14 and change level. So when silver got down to 14 at the bottom last year, I was probably flat on the books on a piece of paper, but it didn't concern me at all. And I still think maybe so we can end the show if you guys are willing. Is why does it have to go? I don't know. Well, I don't like the why question, but where is it going to go, and how much longer we got to do the two impossible questions? What's the top price going to be, and when's it going to get to the two questions that are impossible to answer?
Other than to say that in the long term, we're going higher.
Yeah, we're going higher. I think we've got to look at what, like Mike Maloney points out, what's the value. Not necessarily what's the paper price, but what's the value? Does an ounce of silver buy, 4 new tires for a truck? If it does that, it's overvalued. That kind of thing. And and the when, it could be I put my neck out many times, and people like to take a shot at me, and that's fine. Do it. Those that make mistakes are usually employing those that can or won't. But regardless, I think this year is going to be okay, barring, that black swan. I think 2018 is when, as you guys stated, you're going to see that Trumpflation. You're going to go from the Trump euphoria into the Trump's okay, into Trump's good, into Trump's okay, into I'm not feeling as good as I used to kind of thing. And then you're going to start seeing real inflation hit Main Street. And once that happens, boy, that's a psychological event. That's not a monetary event. It is in a way, but it's much more of a psychological event. Once that happens, you can't just get up there and put a win inflation now button on your lapel and turn it around. And that's what's going to happen. And when that happens, that's when the acceleration starts. So when the acceleration starts, it's going to be, in my view, something to behold.
Yeah.
All right. Well, before we close the show, if you can let the listeners know where to find your regular excellent work, David.
Yeah, I think I've got a few websites, as you guys know. If you're interested in some of the more interesting speculations we have, I've got the domain silverspeculator.com, all one word. I did like a 5-minute or 4-minute video. If you're inclined to get, some free research, and it is free, just go to richesinresources.com. I own that domain. We tried a specialty service that really didn't take off, so I just took over the domain and made it a free website or a free web page, really. So just go to richesinresources.com. You'll get an 11-page report. I wrote every word of it. And it'll give you some movies to watch. It'll give you some key things to keep abreast of so that you got a better handle on this market. And then again, to repeat, just type in the 10 rules of silver investing. Those are rules that will help you in investing in general, and try to keep your emotions at bay. And lastly, I'm going to plug the book, guys. And off air, I think if you off air, let me know if I sent you one or not. Because if I haven't, I'll certainly get you one. It's called Second Chance: How to Make and Keep Big Money in the Final Leg of This Precious Metals Bull Market. Very fun to write. A lot of experience there. I mean, I watched the gold market go from the $200 level to the $800 level, and particularly being long and not knowing much about commodity trading at the time and getting into gold at 300 and getting out at 7. I mean, when you're in your 20s and you get that kind of move in a commodity, you're feeling pretty good, let me tell you.
Yeah. And you're leaving out the most important website. As I pull it up here,
yes,
hear you speaking with your themorganreport.com.
Thank you.
Themorganreport.com is where all of you folks listening today can check out his newsletter. And David does fantastic work. He's been at it for longer than pretty much anyone else in the silver space, and is very authoritative on silver and understands markets across the board.
All right. Well, again, David, thanks for joining us. It's always great to have you back with us.
I appreciate it.
All right. For the doc, Eric Dubin, and our friend, the silver expert, David Morgan, thanks for tuning into this week's SD Weekly Metals and Markets.
Start investing in gold and silver at sdbullion.com today and join over 35,000 precious metals investors who have made the switch to the lowest gold and silver prices in the industry. SD Bullion recently claimed a spot on the prestigious Inc. 500, making them one of the fastest growing bullion companies in the United States. With low bullion prices and over-the-top customer service, SD Bullion is setting the standard for precious metals transactions. Visit www.sdbullion.com today. Start saving on every precious metals purchase you make.
This is the Doc and Eric Dubin with the SD Weekly Metals and Market Track. Well, joining us today is the silver guru himself, David Morgan. David, it's great to have you back on the show with us.
Well, thanks for having me back.
All right. Well, it's been another big week for the metals. Gold traded as high as 1245, I think, both the last 2 days, Wednesday and Thursday. It's currently trading about 1235 here in the afternoon. Last couple of hours of trading in the access market here on Friday. Silver's been the one that's had the big move today, up almost 50.
CO2 reports. And what that meant, and I said this to my members, throughout the months, is one, it's harder to interpret, and two, that there's a lot stronger hands on the long side than there used to be. And that's, again, going back only a year and a half or so. So I'm still kind of getting in the flow, if you want to call it that, as far as what the predictable end is when we've had what I call a washout and the game starts over. which is all about the paper markets. It's all about how they move the price around. And it's all about when they've flushed out as many longs on the trading funds as possible to start, as I say, the game over. So looking at silver, I'm more inclined to see that this thing has got some more upward potential, but not a lot. On the gold side, it looks a little better. But Eric, I know you look at this stuff as well. You might disagree with my take on it so far. Why don't you add your thoughts on this, what you're seeing?
Sure, yeah. I mean, we talked a moment ago before we started the call about how the parallels to last year are so fast.
There's Business Daily, the gold mining sector is one of the top ones for the year, even the round trip. So as far as this year's concerned, it looks like it's kind of a repeat performance. I'll be doing a pretty detailed commitment of traders for the members here later in the day. But I'm not like cheerleading this rally as far as I'm very happy to see it. I'm not cheerleading from the aspect that I really like the commitment of traders reports that I'm looking at on the silver side. Gold looks a little better, but it's still becoming a more of a difficulty for me and others, I believe, to interpret the COT properly, which means it changed about a year ago because the SGE, the Shanghai Gold Exchange, had gotten prominent enough and enough volume to create a substantial enough market to influence what the commitment of traders reports looks like. And really, you can almost look at the SGE and kind of superimpose that data on top of the
cents in the day, and it's traded above $18. And as we talk here just after 3 p.m. Eastern, it's hovering right around that $18 level. Certainly great to see silver leading gold today, and actually gold pretty much trading flat on the day with silver having a big day. So let's start with your take on the markets here and the strength in silver we're seeing today, David.
Okay, well, it's kind of a repeat of last year, really. I mean, if you go back to 2016, January, February, I said that the market had bottomed at the end of 2015, and then I expected a really strong January minimum, probably January, February, and then, you know, I'm pretty good at letting the market tell me what it's doing and not me telling it what I want it to do. And we got a really nice rally all the way up into the summer months, which is unusual. Usually August is the worst month for gold and silver. And we got out on our trading positions at that time. And then we watched, you know, a lot of the, you know, uptrend come back down. But if you look at it on a year-over-year basis, all of 2016, and you look at
investigating, you know, bottoming out in December and last year, or the year before, I should say, 2015, last week of December is when we bottomed out, if memory serves. I don't have a chart in front of me, but basically, other than that little tweak of difference, you know, we bottomed somewhere around the 22nd of last year. And we're following a very similar pattern where, if memory serves, you were on our show back in either late January or early February. I'm not entirely sure. But we were talking about how silver would leap higher and exhibit its kind of restless metal tradition of showing where the tip of the spear of sentiment was. And it's doing that right now. I mean, even as we record today on Friday, the really big move that we see is suggestive of a tighter market than what most people would give credence to. And this kind of snapback style leap forward that we have been seeing periodically since the start of this year. Every once in a while, silver will be doing this kind of thing. And the same thing was happening when